Hey there, it's Casey Dimon here, TaxSaleAcademy.com. Thank you so much for joining me for this week's tax sale question segment. Now, before we get to this week's question, if you are looking to learn more about investing in tax defaulted real estate, don't forget to subscribe to our channel, and you can do that by clicking that red subscribe button. That way you don't miss out on future tax sale training videos, which we post 3 times every single week. All right, let's go ahead and get to this week's question. This week's question comes to us from Realtor Mary. She says, how about you can't sell tax sale titles? So that's very short and to the point, and I appreciate that. But I need to address it because it's such a common misconception about the tax sale business, especially to those who have just a little bit of know-how in the real estate market, maybe realtors or investors or builders, that kind of stuff. So I'm sure Realtor Mary might have had good intentions, but her comment is unfortunately misinformed. So let's go to the beginning real quick. In the conventional real estate market, when real estate transfers happen from one person to the next, from a seller to a buyer, they'll usually close that transaction through a title company or a real estate attorney. What most people might not even realize is during that transfer process, there's something called a title search performed. This is research done against the chain of title for a specific piece of real estate, the property that's being transferred. In the simplest form, one thing they check for example, are liens against that property. The buyer doesn't deserve to get any liens that the seller failed to pay for or they didn't know about. That wouldn't be fair. So they check for that and all sorts of other stuff in that chain of title. If everything checks out, the attorney or the title company will issue insurance known as title insurance. And this ensures the buyer and their lender, if they have one, that the title is clear and there's nothing to worry about in that chain of title. And then if something pops up down the road, you actually have an insurance policy to fall back on that will cover you. So that's title insurance kind of in a nutshell. Now, back to tax sales. When a property goes through the tax foreclosure process, there are extremely precise steps that must be met to make sure everything is done properly. There's owners to contact, there's deadlines to meet, certain language and documents, all that kind of stuff. So when a title company or a real estate attorney sees that a property has gone through tax foreclosure, it kind of throws up a red flag. They're like, listen, we don't want to ensure that because there's so many steps that should have taken place and we can't guarantee those steps did take place. Instead, they'll label it as a title being clouded, which is what Realtor Mary commented about and is referencing, and is usually about as much as most realtors understand about the tax sale business. I'm not knocking realtors at all here because I've been one for close to 2 decades now. It's just not in their business interest most of the time because they simply don't make money through the tax sale process. So anyhow, we have a title that is now clouded and can't be insured. So what do? We have a few different options, and I've got videos on all these that go into much further detail than what we're about to discuss. But the first option is to sell it as is. Let the buyer take care of it using one of the processes that we're going to discuss after this. I've done this hundreds and hundreds of times. It's a very easy process if you understand and go into the deal knowing that you will not get full market value for that property since you won't have title insurance. Nobody's going to pay a full market value price for a piece of property that has a clouded title. But when you go to this option, it's easy, it's fast, you just sell it as is. Another option is to hire an attorney to clear the title for you. This is usually done through a suit to quiet title. And yes, that's a lawsuit. And it's a lawsuit against anybody that could potentially claim an interest in that property, like former owners or former lien holders. So you're essentially suing them in an effort to force them to raise any claim that they have right now or otherwise forever be quiet about their claims to that title. It's usually just a formality, but as long as there are no issues, the judge will sign off on that quieted title. You take that judgment back to the title insurance company or the attorney closing it, and they will then issue title insurance against that property. Another option is to use something called a tax foreclosure certification. There's companies that actually do this. These companies have partnerships with title insurance companies, and that's all that they do. What they do is they'll research every single little detail, make sure all the T's are crossed, all the I's are dotted when it comes to that tax foreclosure process. They're going to make sure everything was done exactly the way that it should have been, okay? So in other words, they'll be able to certify to the title insurance company that they work with, yes, everything is good with that tax foreclosure. And in the end, they'll give them the go-ahead to insure that title for that property. And then the last option is to run a title search, identify anyone who might have a potential interest in the property, and then have them sign a quitclaim deed to you. And this works best when it's just one or two people that might have a claim to that property, when they're easy to track down, when they agree to sign that piece of paper that quitclaims their interest to you. So if they're easy to track down, that kind of stuff, by all means, consider that method. It's cheap and usually it's fast. You just got to make sure that the title insurance company will accept that at the end of the day. Now, if you can't track them down, if they're deceased or something like that, then obviously you can't get them to sign that quitclaim deed. And again, I've got videos on each one of these here on YouTube, and obviously we go into great detail on this inside the Tax Sale Academy when it comes to dealing with these title clouds. So, Realtor Mary, hopefully this has helped you out learn something about the clouded titles that exist once a property goes through the tax foreclosure process. And hopefully also this, increases your knowledge base. That way you can help out some investors that you potentially work with and you can serve them better as well. So if you or anybody else has another follow-up question, or you have a question about anything related to tax sale investing, feel free to go ahead and post it below this video in the comments section, or leave it below any of our videos right here on YouTube, and we'll definitely answer it, and we might just shoot a video like this one. And for more information on tax sale investing, head on over to my website, TaxSaleAcademy.com. There's also a whole bunch of incredibly helpful links that I'm going to post for you down below in the description of this video. Hey, take care, folks. See you next time. Bye-bye.